All right, good morning, everyone. It is 8:48 in the morning of February 23rd, 2022, and this is my pre-market strategy session. So what we've got here, let's see, this is my risk range levels here. Let's go to the SPY here real quick. And what you can see here on the SPY is this sort of recent leg down, a little bit of a rise, and then kind of a plop back down again. And actually, let me bring up this Fibonacci here real quick, and you'll see. So from the top on January 4th to the bottom of January 24th here, you can see this Fibonacci was tested. This is the 61.8 Fibonacci, and it really got rejected from right there. It came up there, hit it once, got rejected, hit it again, and then really got rejected. So. I like that. I like that coincidence. It's not, there's nothing really, scientific behind it other than it's something that people do. And enough people do it, enough people sort of follow along with it, then that's the way it'll trade. And so also the next thing that a lot of people are looking at is this period of consolidation right here. There are 5 days down here in this dip, and we're back in that price range. And so I imagine that in another 5 days, this thing will resolve itself. So let's see, 1, 2, 3, 4. 1, 2, 3, 4, 5. I learned how to count a long time ago. So somewhere around the end of the month, the 28th of February, isn't that a nice coincidence? I expect we will see a direction either up or down after we consolidate for that period of time. Let me get rid of these here real quick. And I'm going to draw a box. We'll see how accurate this box is after a few days. Here we go. Here's a rectangle. And let's say we're going to be in a range that'll be roughly from here down to here. We'll be inside of this box. Was that 28th of February? Yeah, there we go. We're going to be inside this box for the next 20th February. There we go. We're going to be inside this box for the next 5 days. Next 4 days. Here, let me pull this out for one more day here. There. We're going to be inside of this box for the next 4 or 5 days. And that's going to be really tough to trade. I imagine, I guess, it's possible a break above this level right here. Keep an eye on the VIX. Let's pull up the VIX. So the low on the VIX right now, that's not right. God, I just did these numbers this morning. I don't know why. I don't know why. Oh, it is correct. Okay, 21.59, 32.46. So the bottom end of the VIX for the next few days is going to be 21.59, and that will be a spot where you want to start gathering into some short positions, and if it runs all the way back up to 32.46, then that's where we'll want to start letting go, start covering shorts. Though these times in here, this is really, really choppy stuff. And so it's going to be tough to trade. So keep your risk tight. I think that it'll probably be a good time for a lot of straddles or chokes and with, short expiration dates and so on. So let's see, when is the 28th here? 24, 25, 26, 28. Yeah, so 1, 2, 3, 4 more trading days. We're at the end of February, and we get to move on into the next month, which is March, which can be also really quite. Actually, in my experience, the first half of March is really quite eventful, and then the last half of March it really slows down. People, between January and February in here. The first, 2 months is when people jockey for their positions on how they're going to set up their portfolios for pretty much the year, or at least the next 6 months. And then things, settle down. In my experience, things settle down in the second half of March. This year might be a little bit different because we are scheduled. The forecast is looking kind of grim for the next 6 months. It's 9 months to a year, actually, as far as GDP and inflation are concerned. So this year could be a little bit different from most years, although it probably won't be much different. Things will settle down in March. And then April, things tend to settle down. And then in May, things tend to pick up again a little bit. And then from after May into June, July, and August, things are pretty slow usually. So we'll see how it goes this year. It could be a little bit different. So outside of that, there are some things popping up on my scanner, on my large cap scanner, and on my small cap scanner, but I'm just really not interested. I have been getting just very, very good trades off of Tesla, Amazon, the SPY, and the Qs. I have the IWM up, the Russell up, and I have so little. And look at that! It just fell out of its channel. It's on its way down. There's definitely some trades developing here in this chart, no doubt about it. But I've traded it so few times. I've found myself being busy enough with so many other things to trade that I just don't really see a good reason to branch out at the moment. Something here at Tesla. So I started drawing some laser light works you can see here on Tesla, and actually this one right here is the only one that I drew today. These two right here were existing already, so I drew this one today, and this one already existed, and so did this one right here. But to kind of clean it all up and then take a look at the Fibonacci here. So the Fibonacci that I drew on Tesla extends from, see this consolidation area right here? This is actually a pretty nice consolidation pattern. Let's use a couple of rays here on Tesla. And then, really, really rather predictable breakout right here on Tesla. Let me zoom in a bit. That's like about as clean as it gets for a breakout to the upside from a wedge. It ran up here. Let's look at this percentage here. It's somewhat of a flagpole, somewhat not really. Let's go the other way. Let me go the other way, make it a little bit easier. Ran up about 150%. Wow, look at that. Between the 30th of June 2020 to the 1st of September 2020. Good heavens. So June, July, August, and basically, the very beginning of September, that's 4 months. Actually, the end of June, so July and August, so roughly 2 months, really. And this thing ran up 150%. What a run. Okay, so anyway, and then it consolidated for quite some time from November, from that peak, September to November, roughly another 2 months, another 2 months, and then it broke out. Well, so my Fibonacci is from the breakout period up to the top of that move right there. So let me get rid of those real quick. And now, the Fibonacci seems to have done a pretty good job of predicting the price action from there. Now, I don't remember when I put this on. It wasn't until after, I only started trading Tesla. Gosh, I can't even remember the first trade that I took on Tesla, but I think it was back here somewhere. I think it was right around in here somewhere, but I can't remember. But you can see, it did this Fibonacci right here did a pretty decent job of pulling off the levels of where Tesla was going to break out, where it was going to find resistance. And then now that it's on its way back down, you can see, it's coming close to this Fibonacci level down here. Well, that's the 75% level, so that's technically not a Fibonacci number. But here's the 61.8. I'd expect there to be a big reaction at the 61.8 level. I imagine there will be support right there. Who knows exactly, how things go. But there's no doubt this is a Wyckoff distribution in almost textbook. Actually, it is pretty much textbook. Sorry about that. So let's see, the next thing after that. Well, so in today we're looking at a little bit of a pop up. We might get a couple of days here where people have taken some profits. There's some short covering going on for the next couple of days, the next few days actually, and there could be a relief rally coming in here, or there could be just a little bit of consolidation for waiting for the next move down. Sort of like this dip right here that happened. It came down, relief rally, dipped, came back up, consolidated, and is now kind of broken down again. I would actually expect on the Qs chart, the way the Qs chart is looking, I would actually expect further downside from here rather than a period of consolidation. But just to play it safe, until this thing breaks down below 334.15, I would expect to see some more consolidation, sort of like on the SPY, what we're expecting to see on the SPY there. So today, in the next few days, we're bound to see some pretty significant moves to the upside and to the downside. It's just going to be a matter of when those moves decide to play out. And yesterday, let's see, I was looking at the 5 minute. Here's the 5 minute. And yesterday's entry for me was right here on the 5 minute. I got into a straddle right here at the close of this candle. And the reason that I chose that point right there is, well, I guess it's kind of experience. But I was looking and watching, and I had some levels mapped out, and I've forgotten exactly what it all was now. But at that point right there, at that candle, I knew it was either going to break up or it was going to break down. Either we were going to see, a huge down move at this point or an abrupt up move, and it gave the up move. So my straddle, I put on 10 put options and 10 call options, $1 away, roughly $1 away from the price, the current price, in each direction. Actually, I did this on the Qs. I'm sorry. Let me go to there we go. And here. Right there, that's where it is, right there. So it was either going to, it was giving indications it was going to break down and start plowing through this 334.15 level, but you never know, especially into the afternoon session, you never know what's going to happen exactly. And so I didn't want to pick a direction. I just knew that there was going to be moves, that would be able to cover a straddle. There's going to be enough motion to cover a straddle. And so I got into 10 options. I got into 20 options total, 10 puts, 10 calls, $1 outside of the money. And it made a move here from 336. I think it was like 336 and 30 cents or something, where I got into strikes at 335 and strikes at 337, 335 puts and 337 calls. And it made a move all the way up here to 341. I cashed out after it hit 339. So I was in for the premium plus $2 in the money on those options. They cost me $1,000 on each side, a little over $1,000 on each side. And so I was able to pull away a little bit of profit on both sides, or on one side, and it covered the other side. It more than covered the other side. So that's pretty much what I'll be looking for, for the rest of these next few days until the market decides to pick a direction, which I think is going to be toward the end of the month. Either the beginning of next month or the end of this month. We'll see this thing pick a direction. And actually, while we're at it, let's take a look. Let's see if I don't have a quarterly. I'm going to 1 month here. This is the monthly. I'll have to compute out the hours for the monthly, but or for a quarterly, and then kind of map things out. But essentially, a close. I'd be surprised to see the market close above 334.15 for the month. I think we're going to plow through this bottom tail right here. There were buyers last month. This bottom candle, this bottom tail right here on the candle, that represents buyers coming into the market last month. I'd be surprised to see the buyers be able to hold this level this month in February. And of course, a lower close right here then invites more lower closes. So, that's just kind of what's going on right now. So, here we have, 3 red months. Technically speaking, December was also a red month. I mean, it did close, lower than where it opened. So, 3 red months in a row, that starts to look like a trend. So we'll see what happens. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.